All right, everyone. Good afternoon. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. Hope everybody's doing well. Quick sound check, audio check, just to make sure you guys can hear me okay. I want to thank those of you joining me via GoToWebinar and YouTube as well. So you guys out there hear me okay? Just let me know so I can continue. Awesome. Jim says, yo. What's up, Jim? What's up, Craig? Thank you, guys. Awesome. Looks like you guys can hear me okay. Fantastic. All right. Well, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. Been with the company now 17 years. When I first started, maybe you heard this story before, 17 years ago, the company was much smaller. Our education team was maybe one or two people. Steve Chappell, the gentleman to the left of me there, head up the education team back then, and it was just a few folks. That's it. We've grown over the years, obviously, and our education back then focused really primarily on the VectorVest program, the VectorVest system of analyzing stocks, analyzing the market, all the different bells and whistles and tools within the program. We really kind of focused on that back then. Now we've evolved. We teach option trading. We teach retirement investing. We teach swing trading. So we got you guys covered with regards to any portfolio that you're managing. And we hope you're doing that. Managing different portfolios. A short-term trade shouldn't be in the same portfolio as a longer-term investment. They're not managed anywhere close to the same. So break it down, break it up, allocate portions of your overall investment capital to these different types of instruments, options, dividends, swing trading, things like that. Okay, so here's what you're going to learn today. You're going to learn the difference, or a lot of differences, between fundamental investors and technical traders. You're going to learn how we merge the two together. Okay, we have a method of analyzing stocks that takes the guesswork and work out of analyzing stocks. You're going to learn. You're going to know in a moment. Some of the things that fundamental analysts study and parse through, the type of data that they go through. If you're not a VectorVest subscriber, you may be doing this, trying to assess future price, right? We have a very easy way of identifying that, okay? And then finally, how to quickly and easily identify the best trades. If you stick with me to the end, I will share with you a copy of the slides that I'm using, okay? We'll be together for about an hour. I do have a lot of slides. I will also go into the program a little bit later, but somebody remind me at the end, right about 5:15 or so, 5:20, Eastern time, of course, about 50 minutes from now, say, hey, Jerry, don't forget the slides. I'll put them in the handout section of your GoToMeeting control panel, and you can download them quickly there. Okay? All right. So there are two different camps of investors, two major schools of thought when it comes to approaching the stock market. Yet they are on polar opposite. They are polar opposite when it comes to what they believe drives stock prices. And the first is the fundamental analyst. Okay, these are the longer term investors. And these investors look at primarily, or first and foremost, the company's financial strength, earnings, assets, liabilities, expenses, earnings growth, maybe PE ratio. PE ratio is a popular valuation indicator. So they're looking at the underlying company's fundamentals. They're also looking at how well company XYZ is being managed. So all of these things come into play when a fundamental investor, fundamental analyst, is assessing a stock and, again, assessing future price appreciation. A fundamental analyst will also study industry conditions and really favor industry leaders as opposed to laggards. You might find a good stock or two in a poor industry, but you really want to favor the stronger industry groups, and a lot of times it is cyclical. There is a lot of rotation when it comes to industry groups, seasonal and otherwise. Okay, so they'll look at that, and they'll also look at the overall economy. Current inflation, current interest rates. The Fed just announced that they're keeping rates the same, but also talked about 2 more rate hikes coming up here moving forward, which was a little shocking. The market kind of sold off here today after that. But the market doesn't like high interest rates. It doesn't like high inflation. Those things eat at earnings. So the overall economy is very important to a fundamental analyst. Okay, and then next is there's the technical analyst. And technical analysis differs from fundamental analysis in that it's primarily used to identify short-term favorable situations. Okay, that's what a trader is looking to do. And they're looking at historical trends and statistical probability. They're looking solely at price and volume, and they're trying to identify favorable situations currently that happened in the past. Okay, and the assumption from a fundamental analyst is that all the fundamentals that we just talked about is already baked into the price. Okay, they don't attempt to measure a stock's value, and that's primarily what a fundamental analyst do. I failed to mention that actually. So they're going through all of that financial data. Why? What's the end result? They're trying to identify intrinsic value. They're trying to measure the stock's intrinsic value and buy stocks that are undervalued and kind of stay away from stocks that are overvalued or trading higher than what they're worth. Technical analysis don't really care about that. They're just looking at stock charts, trying to identify patterns, and those patterns might suggest what price is going to do moving forward. Now, get them both in a room, and this is probably a little bit more cordial than it actually might be, but get them both in a room, and they will argue till they're blue in the face who's right. Right? I mean, it is a fundamental just difference of belief systems in what moves the stock market and what moves stock prices. We feel that you can merge the two. You don't have to be on one side or the other, or you don't have to be a fundamental analyst and disregard short-term price behavior. Because you know what? Favorable short-term price behavior offers an investor who's looking to hold for the long term a much more favorable price, right? Good stock, maybe you don't want to buy it at the 52-week high. Maybe you want to wait for a pullback. Maybe you identify certain moving averages where the stock price has fallen to. Again, your objective is still long term, but you're trying to identify these better buying opportunities in these solid companies. That's on the one side of it. So fundamental analysts out there, just know that you can learn and apply technical analysis to help pinpoint better entry points into longer term investments. We're trying to maximize returns, right? We're not just trying to buy any old stock at any old price because we're planning on holding it for 4 years or 5 years. We want to get the best price possible and maximize returns. Now, the technical analyst who is really, again, looking at price and volume situations, what's to say that they can't favor the best companies, the fundamentally sound companies? Why don't they care about a stock's value? Even if I'm trading and my objective is maybe a few days, a few weeks, maybe a little bit longer depending on performance, you're in a winning trade, you just ride it, right? Why not favor the fundamentally better companies and just do a little bit of that work up front and say, I got 2 stocks, both exhibiting the same pattern. One is a much better company, right, fundamentally speaking, than the other. So why not favor the more favorable companies? Now, that might seem obvious, but it's not a novel approach. It's not very widely applied, but we're trying to kind of make sure our subscribers understand how to do it. So let's take a look at an example here. June 12th, just a couple of days ago, 2023, McKesson Corp. This is our analysis as of June 12th. Price was roughly $393. We think the company's worth $538.43. That's our value. Remember what I talked about? What a fundamental analyst, what they do to ultimately determine value, right? They look at all those indicators like earnings and assets and liabilities and debt to equity ratio and sales volume and all these things, earnings growth, profitability. We do as well, and we take that information. We take that data and we provide you guys with information. So with a price of $393, trading price of $393, and a value of $538, it's a grossly undervalued stock. A lot of upside potential here, and I don't care if I'm trading it or investing in it. I like that, right? The next few indicators here are on a 0 to 2 scale. So there's a lot of folks in the room here today that are not VectorVest subscribers, so I'm just going to go through this quickly here. Relative value, relative safety, relative timing. RV measures long-term, 1 to 3 year upside price appreciation potential. Let me do something here so you guys can see my visual. Relative safety is an indicator of risk. Relative timing is a trend indicator, and VST combines all three. 0 to 2 scale, above 1 is good, below 1 is bad. So with an RV of 1.46, that's excellent. Tremendous upside price appreciation potential over the next 1 to 3 years. It's a safe investment. The indicator is above 1. So relative safety is an indicator of risk. It's a safe investment. It's trending up in price right now, and it's got a VST, which again combines all three at a good level of 1.24. Then you get into some other fundamental data. Growth rate, earnings per share, earnings yield, PE ratio, growth to PE ratio, and this company pays a dividend as well. And that all of that looks good. 25% earnings growth rate, solid earnings yield, pays a dividend. So looking at our analysis, primarily fundamental analysis, because RT, relative timing there, is the only technical indicator in the bunch here. Fundamentally sound company, isn't it? Right? Rhetorical question, but it's a fundamentally sound company. It's undervalued, good upside potential. It's got a buy rating, good earnings growth. We love it. So those, let me go back. So these values, the values of these indicators is what I want you guys to understand. Above 1 is good. RV above 1, good. RS above 1, good. Earnings growth rate at 25% or at 20%, even 15%, anything above the current sum of interest and inflation is good. So let's rewind the clock a little bit. Okay, that was our analysis of McKesson as of a few days ago. Hard right edge of this chart is October of 2022, and I put on earnings per share, I put on RV, I put on RS, I put on GRT. Earnings per share over this 1 year period from October of 20 to October of 21, October of 22, earnings per share rising, bottom left to upper right, good. RV above 1.3 as of October of 22, good. Relative safety really high there at 1.18 or so, good. Earnings growth rate just continues to move higher. This, if you're looking at any stock today, a month from now, 6 months from now, these are the values of these indicators that you want to see, no matter if you're investing or trading. Dr. Toledo said, it was a quote in an essay a long time ago, he said, a good portfolio management starts with buying the best stocks. We want to buy the best stocks, always. Trading, investing, it doesn't matter. So as of the hard right edge, if I was trading this, I've already done my quick fundamental analysis, right? I don't have to go through financial data and balance sheets or anything like that to determine whether a stock is fundamentally good or not. It's just in the indicators. All that data is baked in here, and the information is spit out. So I know that the stock is a good company. I'm trying to find a good buying opportunity. Well, as of the hard right edge, do I have a good buying opportunity? I would say no, not yet, because price had pulled back off of a high, kind of established a little resistance area at the 52-week high, pulled back, stayed above our stop price, but you see how it's basing here a little bit. It's just capitulating after the pullback. It's got a hold rating. It's not strongly moving higher. It's not moving lower either. Kind of a quiet period. So what traders look for is a breakout. I'm not trading during this quiet period. I'm just not. It's not how it's done. You wait for a breakout, particularly on high volume. Why? Because look, this period, this quiet period could turn into, a pullback. Here was a quiet period here that really never broke out, and you could see what price did after that. So it's a battle here. It's a tug of war. I want the bulls to win before I hop on board. Okay, so just zooming in a little closer. It has this 340 zone right here that the stock price is sitting on so happens to be at a support level. Cool, good. That's nice. So price is kind of capitulating at support. I love it. It's drying. Volume is kind of drying up a little bit as well. Okay. Why is it support? Well, it was resistance back here in May, June, July, August. It was resistance. When price broke above it, it becomes support. I love to see when price breaks out of resistance, retests of that support zone. That's a really good buying zone. But I wait for a breakout, and specifically what I would look for is a new high, a new little channel high, right? Kind of in this mini little channel. I like to see it break above that channel, and it did so on October 4th. Pretty good volume came in there, a little higher than the last 3 days or so, 4 days. So a nice pop there, a nice retracement off of support, and you're looking for an entry. Right? And remember, the price closed above the high there, closed above the high. What also happened is, just adding another piece of technical analysis, the stochastics oscillator had gone from below 20 to above 20 on that retracement. So I said earlier, even a fundamental investor, and remember, we already analyzed this company for its fundamentals. Even a fundamental investor who is looking to buy long-term and hold long-term might want to pay attention to certain indicators, and there's a ton of them. There's a lot of different technical indicators. I'm just showing you two here. Two of my favorites. If you had to learn one, it would be support and resistance. But look, maybe you didn't want to buy it in the middle of August because, boy, price is a little bit overextended there, isn't it? Right? It's almost parabolic. It broke through resistance. That's great. But let's say, the middle of August there is the hard right edge, and you're saying, this is not sustainable. I'm a little bit, technically speaking again, looking technically from a technical perspective. We're overbought. Stochastics is above 80. I'm going to wait for a better buying opportunity. The company is still good. I know that. I'm going to wait for a better buying opportunity, and really no better buying opportunity on a stock like this that's in such a strong uptrend. I guarantee price is above the 200-day moving average and probably above the 50-day moving average. So you got a nice, strong intermediate uptrend. You got a nice, strong long-term uptrend, but you have a short-term correction and a drop right down to support. Even if you're an investor looking to buy the stock for the long term, pay attention to stuff like this, because you're going to get a better price. This is, this 350 and change price, a lot better than 380 if you would have just bought it and said, hey, I plan on holding it for 5 years, whatever. Right? Look for these more attractive buying opportunities. Now, if it were just a trade, if it were an investment, what type of management would you be applying? Recommendation equals sell, right? Something like that, a looser stop. You don't want to get bounced out too quickly. There's no better long-term exit criteria than recommendation equals sell. When price falls below the 13-week moving average, get rid of it. Get rid of it. Okay? You can always buy back in after the downtrend is over, because that's what's happening with a sell rating. You're in a downtrend, and it's becoming painful. So you want to take your profits, cut your losses when the stock gets a sell rating. And we'll look at a long-term chart of McKesson in a moment. But in terms of a short-term trade, If I buy off support and I have clear overhead resistance above me, that is what I'm going to use as my initial profit target. Okay? I'm fast forwarding just a day here because you got to wait for confirmation. That's very important. So the breakout day, fantastic on October 4th. Got to wait for confirmation. We did get confirmation during the day on the following day there, October 5th. Price didn't close above the previous day's close, but it did move higher during the day, so we got in. Okay. Question becomes, all right, you're telling us that October 4th to October 5th it was a good buying opportunity for McKesson. But Jerry, you're a market analysis company as well. Was the market favorable? Was the market telling us that it was okay to buy? I'm not just going to show you a favorable setup and say this would have been a good time to buy, and here's what the setup looks like, and here's your profit target. I wouldn't show you something like that in an unfavorable market environment or in a downtrending market or in a situation where we said don't buy any stocks. So looking at here a market timing graph, October 4th, remember that was our date on McKesson there, the retracement off of support. What did the market do? Well, first off, the MTI and the buy to sell ratio, if you guys are VectorVest subscribers, you should know these numbers by heart, right? If the MTI stands for market timing indicator, when it goes below 0.6, and when the buy to sell ratio goes below 0.2, and both of those indicators fell below those respective levels prior to the rally, you know what that means. You know that the market is really oversold and an explosive rally is a buying opportunity. Explosive rally is a buying opportunity. We also got a green light in the price column of the color guard on that day. You know those are bullish signals. So even though we saw we looked at McKesson and it showed a nice setup, got to look at the market. Okay, and so the market was starting to pop there. So long-term holding for McKesson, what did I say? I said no better stop than the recommendation equals sell. So during this whole time period, and we're basically almost looking at the hard right edge. No, we are looking at the hard right edge, June 14th. So June of 2020 to June of 2023, this stock never got a sell rating. Never got a sell rating. Look all up at the top. Never got a sell rating. Price of the stock never closed below our stop price. These red arrows and green arrows are our confirmed market calls. You are able to overlay our confirmed market calls on individual stock graphs. So what we say, and these are the confirmed down calls. So what we say at a confirmed down signal, we're telling you that the market has been falling for the last couple of weeks, and there are more sell-rated stocks than buy-rated stocks. It's a confirmed down. We say when we issue a confirmed down, we say don't buy any more stocks. We never say sell everything in your portfolio, although that is an option for you. What most of our subscribers do is they stop buying and they let the stop criteria that they've applied to each position manage the position, manage the portfolio. If they happen to get stopped out during a confirmed down situation, they're not buying anymore. They're not replacing it. So even though we got multiple confirmed down signals over the last 3 years, the stock never got a sell rating. What does that mean? That means you could have bought it back in June of 2020 and held it to today. What could you also have done? You could have also traded it in your swing trading portfolio when you see and continue to see these really nice buying opportunities, right? So now we're applying technical analysis to identify trading signals in a stock that we currently already own. We own it. You know, it's in our retirement portfolio maybe, right? Why shouldn't it be? It's got all the earmarks of that type of a stock. Undervalued, good upside potential, safe, good earnings growth, all that stuff. That's a retirement stock. What's to say that you can't have it in your swing trading portfolio as well? And again, continue to recognize these buying opportunities as they come. So just in that quick period there, October 4th is when we got the setup. And you know what's interesting too? This I wouldn't say always happens, but it happens a lot. You buy into a stock, it comes off of support. What happens? It almost immediately comes back down to retest support. So you're a little underwater here, but did you sell? No, you didn't sell. Why didn't you sell? Well, I should have went over this before. But look, if I'm buying off of a support retracement, that support level is my exit, is my floor, is my initial stop. Okay? Price never, it retested support again like it did, for the fourth time there in just that short period of time, but it never fell below it. Never fell below that support level. So you hung in there a couple of down days after you take the trade, and the stock does what you expected it to do. That support level held, and it approached resistance. It approached resistance on this day and just kept going. No resistance anymore. No resistance anymore. And just up until that point there, almost an 8.5% gain. That's 140% annualized return. So you have to then kind of protect profits, right? You got a nice 8.5% gain in a week or so. You got to look to protect profits. Price blasted through resistance. It's now kind of stalling a little bit, just under $400, about $390 or so. And now you begin to apply. This was a trade, right? Short-term trade. So we got to manage it that way. You have to pay attention to these reversal signals. Okay, one black crow, that's a bearish candlestick reversal signal. I would say, I wouldn't argue. I would empirically tell you that you're in a very overbought short-term price situation. The stochastics oscillator, which I just applied there, is above 80. Remember, we entered in when it went from below 20 to above 20. If you are fortunate enough to take a trade when the stochastics goes from below 20 to above 20, and for it to reach above 80, you got to look to take profits. You got to look to start looking for opportunities to take profits. The one black crow, and follow through the next day, there it is. There's your opportunity to take the trade off. And what? Just forget about the stock forever? No. Put it in a watch list. Keep it in a watch list. You're seeing a short-term pullback. Let's look for a better buying opportunity. Right? Follow my cursor now. These 2 days are what caused us to sell the stock. I know what the stock kind of went up a little bit for the next couple of days. I'm not worried about that. Okay? But then what did it do? Crashed. Kind of really fell. Look at this big red candle. Where did this big red candle stop? At support. I would have been looking to take a long position in McKesson the following day if we would have gotten a retracement off of that support level. A pullback to an old high is mouth-watering. Okay? It didn't do that. The stock price didn't do that the next day. It actually crashed again, but look at where it stopped. It stopped at the same support level that you bought in, a few months back. You're saying, wow, price is back there again? And that's your next buying opportunity. I would probably look in this area here as my buy zone. Really on the next day. So the stock price hit that 340 support zone and rallied off of it nicely. That was a reversal signal in and of itself. Closed at the upper end of the range. Follow through the next day, I would have taken it. Look at how much during the day too. Stock price rose. I would have taken it, and I would have used that support level as my floor. Never got there, and then you have another profitable short-term trade on your hands. And again, you're still holding the position long-term in your retirement portfolio because it has never hit a sell rating, and you're just supplementing those long-term gains with shorter-term gains. Time and time again. Month after month after month, you're just trying to identify, and you don't have to always just trade it, to ad nauseum. Look for the best opportunities. Look for the best opportunities. Here's another example. United Health Group, as of a few days ago, same type of analysis, right? Price of $491. We think it's worth $543. Great. RV above 1, RS above 1. Now the RT is a little bit below 1. It's at 0.93. So now might not be the time to buy it. Okay. It also has a hold rating. It's not a buy rating. So maybe not the best time for a long-term position. Excuse me. Good earnings growth rate at 18%. Good earnings yield. Also pays a dividend as well. Yeah. Van says, how or what scan will help with finding these stocks? This is the frustration I have faced. You got it, my friend. I will get there. I will get there, definitely. Okay. So hard right edge is right around February of 2023. Fundamentally, how we look at earnings per share, bottom left to upper right, RV, well above 1, RS, well above 1. I mean, it was even higher. Both indicators were even higher back here in November of 20, November of 21, May of 21. Earnings growth rate strong. Okay? So remember that these are the values of the indicators. These are where you want these indicators to be, to say, yes, this is a fundamentally sound company, or no, it's not a fundamentally sound company. RV less than 1, RS less than 1. You want to stay away from those guys unless you're shorting them. Okay? So this stock is a trader's dream. It's an investor's dream as well. Look, because it also during this time period never got a sell rating. Okay, maybe did for one day there, but then got a buy not too long after that. So you could have been in this stock the entire time in your retirement portfolio. And again, why wouldn't it be in that type of portfolio? All the indicators line up. But this is a trader's dream. Because here, September, December, March 2021, you got clear resistance, right? 1 touch, 2 touches, 3 touches, and then a little retracement, and then finally you get your breakout above resistance. Okay, so that's a bullish signal. That's a bullish signal. You buy it, you take it. Price rallies, sells off a little bit, you take your profits. What do you hope for? What do you hope for? You hope for, remember, this was resistance, now it's support because price broke above it. You hope for a retest of that zone, and you got it in, looks like May of 2021. And there was your retracement off of it. There was your next buy. Price reaches resistance, fails to kind of break above that resistance zone, and then pulls back from it. You take the trade off. What do you wait for? What do you hope for? You hope for another retest of that about 375 support zone, and you got it. And you got another. There was that opportunity, and you got another opportunity. You're supplementing your long-term gains. Now, you're not making any money. You're not making any long-term gains here, right? Because price is kind of channeling here. It's moving sideways. So you're in your retirement portfolio, this position is stagnant, but you're supplementing those returns, and you're kind of giving yourself a little boost by taking a look at these situations. And look at the stochastics oscillator here. Let me go back, actually. So there, stochastics went below 20, pulled back to support, crosses from below 20 to above 20, retraces from support. Price pulls back to support. The stochastics oscillator goes from below 20 to above 20. Beautiful entry. Price reaches, and I'll be honest with you, see how price rallied there and got to the resistance level? A couple of little red candles there, I would have sold out and took my gains. I would have hoped for another pullback towards support, but you never got it. You got an immediate blast through that resistance level. Say, okay, you could have taken it on the breakout above resistance for a quick little gain there, or waited for the retest of support, which you got. On that retest, the stochastics oscillator goes from below 20 to above 20. There's another trade. Now what's happening is the price is starting to move higher, right? It's starting to trend higher, and these support and resistance zones begin to elevate. So now you're playing off of a different support level. You're playing off of a level that was resistance. And just time and time again, stochastics goes below 20, price retraces from support. You're really getting some good buy signals here. No, Van, we're not going to talk about options. I'm sorry. That's a whole nother course. All I would say is instead of buying the stock, you buy the option. Um, so, so there, June 21st, support retracement, stochastics going from below 20 to above 20. Great trade. Now, again, prices beginning to move higher and your support and resistance zones become elevated, but you're getting these signals. That's why I said this is a trader's dream, is because not only are you uptrending, you do enter into these consolidation periods where where the stock's price finds clear support and resistance. And that's what traders are really looking for. Okay? So, to Van's question, how am I going to find my trades? Okay? How am I going to find my trades? There is the one-by-one method. This is not the preferred method. This is not an efficient use of time, having to go through charts. You know what you're looking for, right? But having to go through charts to identify setups is not an efficient use of your time. My preferred method is to use a scan. Use a scan. And it's as simple as something like this. Okay? A prudent type search, it could be prudent performers, it could be best of the biggies. You want the scan to find favorable indicators, favorable levels for the indicators that we talked about, right? Stock earnings growth rate here with prudent performers, stock's earnings growth rate greater than or equal to 15%. We want the relative safety greater than 1.15, relative value greater than 1.25. We know that's what we want in terms of a fundamentally sound company, right? The list is sorted by VST. However, notice the one-line parameter at the bottom. We are looking for the stocks, the stochastics, to have crossed above 20 in the last one day. Well, what do we know if the stock's price has crossed above 20 in the last one day? What has it done in the short term? It's pulled back, right? It's pulled back in the short term, and the crossover above 20 is a buying opportunity after a short-term corrective period within a nice, strong underlying trend, and that's what we're looking for. So a couple of examples here. Just a few days ago, June 2nd, Churchill Downs. How's this chart look? This is a fundamentally sound company. Okay, good RV, good RS, undervalued. It's got all the earmarks of a good company. On June 2nd, we got a signal. Okay, price pulling back off of a new 52-week high. Where did it land? It landed at an old high. The pullback caused the stochastics oscillator to go from below 20 to above 20. And this, by the way, was a stock that returned from the search that I just showed you on June 2nd. So nice retracement off of support. Did kind of come back and retest right after, so you never got follow through. But now you're getting the pull away from support as well. Good setup here. Not only a good setup for a short-term trade, because resistance would be my profit target, and right below support would be my stop loss. So if ever I take a trade and price falls below the support level that I just bought it off of, I'm cutting it loose. Another good setup, FI. Price pulling back off of a new high. Look at where it stopped, right at support. Look at those long lower wicks too. You guys see that? It's a couple of hammers, a couple of dojis, but these long lower wicks suggest what does it tell us? It tells us that the bulls or buyers pushed the price off of the lows and closed price well off of the lows, maybe at the high of the session or close to it. When you see that type of reversal at support, that's a very strong bullish signal. You of course don't want to just buy. You want to wait for the pop, and you look at that. June 2nd, stochastics goes from below 20 to above 20. That's the scan, remember? Prudent performer is a prudent type stock with the stochastics going from below 20 to above 20. We're just kind of layering in support and resistance here as well. Here's another one. Perfect. GPK. Stock goes from bottom left to upper right. Nice chart pattern, higher highs and higher lows, but really strong level of support here with a couple of really nice buying opportunities when the stochastics oscillator went from below 20 to above 20. Let me hop into the program. Let me show you guys here that scan in real time. Now, if I would have run this as of today's close, I wouldn't get any stocks. This is not a search that you have in the program, in your own programs, by the way, but this is just a concept, guys, that I want you guys to understand. So when Van asked about a scan, this is how you create the scan. You have to know what you're looking for, okay? I could do the same thing with a search like best of the biggies. Look at this. Look at the parameters here. Best of the biggies. We want the RV to be greater than 1. We want the RS to be greater than 1. And look at the sort. RV times RS times GRT times market cap. If I run that search, look at what you got. Tesla, Broadcom, United. Look at that. United, Visa, JP Morgan, MasterCard, Salesforce. These are all fantastic companies. Look at the RVs. Look at the RSs. Okay, these are fantastic companies. If I wanted to say, you know, I don't want to buy, I want to buy them only if they're pulling, let's say, stochastics is crossing above 20. I'd add that one line parameter in the search: price volume, price split adjusted, pro trader, click on stochastics. I want the industry standard 14.3 slow to have crossed in the past 1 day above 20. Now, a lot of these stocks that just came up on the list might not come up on the list again. Only a few did. Let's take a look at the chart. Let me clean up the chart a little bit. First off, MELI price has prices above the 200-day moving average. Let me add stochastics. I'll add support and resistance too, because I see clearly that price is at support. So the stochastics oscillator just crossed from below 20 to above 20. That's why the stock came up on the list. It's actually right at support as well. This is a good setup. This is a good setup for a short-term trade. Fundamentally sound company, but it's really starting to display an attractive situation here. Now, I wouldn't just buy it now. I'd wait for price to break above support. But do you see how easy it was and how quickly we found a stock? Now, there's not that many in the list. So I'll go through them fast here. MSI, another one that looks pretty good here. But I'd like to see a little bit more of a pop off of this support level. But another good setup. I don't like this one. And by the way, with MSI, price is above the 200-day moving average. So I really want these long-term uptrends, but pulling back. Even though Agilent is technically a fundamentally sound company, price is below the 200-day moving average. Yes, it's just retracing from support, and stochastic has gone from below 20 to above 20, but it's in an underlying downtrend. I don't want to mess with it. Same thing with MTD, underlying downtrend. Yes, I know it's at support. You know, maybe it's setting up, but I want to just favor, man, beautiful. Right at the 200-day. Stochastics is just crossing from below 20 to above 20. See when it did that here? Look what happened. Now, again, with this one, I would put it in a watch list. I just wait. I just need to see a little bit more of a pop off of that support level. And you just go through the charts. I wouldn't like this one because price is below that 200-day. Absolutely not. Absolutely not. Van is asking, where should market timing be for this to be working? At any time that we say that it's okay to buy stocks. It doesn't have to be one particular market timing system. So as of right now, and as of the last couple of weeks, we have been saying it's been okay to buy. Right? All that green, really starting June 1st. So what's today? Last 2 weeks. So you just want our guidance to be somewhat bullish. Okay? So it doesn't have to be one market timing system or another. It's got to be at least one of them, primary wave up, green light in the price column, DEW up, confirmed up. If those are in place, it's okay to buy. Okay. Questions are coming in about how to apply this, because a lot of you guys don't have Pro Trader, is what I'm seeing here. So, question is, how can I take my game to the next level? Well, you have a choice. Choices are you can do nothing. Okay, you can do it alone. Maybe take bits and pieces of what I taught you today, or kind of the preferred method here is to let us show you. Let us give you the answers. So that's why a number of us in the education department put this course together. This is a 4-instructor course here called Uncovering Trends, Technical Analysis the Easy Way. The complete Uncovering Trends program consists of 6 training modules. This is the second time, folks, that we have done this course. This is one of our newer educational courses in the university. 3 months ago or so was the first time for our first class. This is our second class. So you get 6 training modules that were just recorded a few months ago. All the videos, the slides, you get graph resource tutorials, and also 1-year access to all the material. A few bonuses. We are going to be meeting live, guys. Our class, when you register for this class, and I'll talk about how to do that in a moment, we will be meeting live 6 times. We're going to guide you through the entire process and review in these mastery sessions all of the contents that were delivered in the module. You'll also get private dedicated email support as well. Bonus number 2, if you don't already have VectorVest Premium, we're going to give it to you for 70 days. VectorVest Premium includes Pro Trader technical searches, the ability to add support and resistance and stochastics, or maybe MACD or RSI, to an existing fundamental search. The ability to do that does require the Pro Trader tool. So here are the 6 modules. Module number 1, we kind of piggyback off a little bit of what I talked about today. Fundamental blending, fundamental and technical analysis. Really understanding how to do that. And of course, the importance of market direction. So laying the foundation there in module number 1. Module number 2, we get into the importance of price structure and volume analysis, the different ways to view price, why you would view price in the different ways. We talk about the different market environments where it could be trending, neutral markets, extreme market situations, and the importance of volume there. Module number 3, candlestick analysis and reversal signals. How to trade candlestick reversal signals and which indicators to use, technical indicators to use. Module number 4 is a doozy. It's a beast. I said that there were, I think there's 60 lessons total. There are about 16 of them in this module. This is where all the technical indicators are taught. Moving averages, MACD, Bollinger Bands, RSI, stochastics, envelopes, momentum, on-balance volume, complete of any indicator that we have in the program. Any technical indicator is taught. Fibonacci retracements and bullish and bearish divergences. So this was a big module. Module number 5, there's more to trading setups than just the chart itself. There's managing ourselves. And the psychology behind what we're trying to do here. So trade management and psychology, the importance of having a trading plan, risk management strategies, and really important segment, a little bit overlooked. Position sizing, diversification, asset management, that's all covered in module number 5. And then VectorVest Advantage, module number 6, synergy of fundamental and technical analysis, Pro Trader scans, and the NPI. So what I'm going to do, guys, I'm going to type in that address that you see at the bottom there, www.vectorvest.com/ I'm going to spell it correctly, trends. There it is. So again, here's what you get: the complete course, mastery session, 60 lessons, 6 live mastery support sessions, 70 days access to VectorVest Premium, and 1 year access to the course. Now the list price is $19.90. The early bird rate is available at $14.95, but guys, you took time out of your day, man, end of day on Wednesday. I really appreciate it. We're going to knock an extra $500 off there, $600, $8.95. This price is only available for a very short period of time, okay? Only a few days. We do, with all of our courses, offer a 100% money-back guarantee. So after the course is over, if you say, really hadn't learned anything, You did all the work, you came to the classes or at least watched the recordings, you did any assignment that we gave, you're still not satisfied, we'll gladly give you that refund. So when are the live sessions and what if I missed one are common questions that we get. The modules, guys, that I just went through, those 6 modules are pre-recorded. When you go to the university, okay, you will see all of the content right away. You can watch all of it if you wanted to. Daryl's asking, is there an elite member price? Well, the elite price, Daryl, is half off the regular rate, which is $19.90. So the elite rate is $19.95. This is even better than that rate, only for a very short period of time. So even if you're an elite subscriber, you probably want to save some money as opposed to just waiting for the elite rate to kick in, which is a little higher here. So here are the dates for the live mastery support sessions. We begin in 2 weeks, June 8th. All the sessions start at 1 p.m. Now, there are really 7 mastery sessions because mastery session number 4 had to be broken up into 2 parts. We didn't do that for the first class a few months ago. We reviewed all 16 indicators in 1 mastery session. And we got some feedback that said, hey, you might want to break up the mastery session, maybe do part 1 and part 2. And that just made complete sense to us. Again, first time around, didn't quite realize how cumbersome that module was. So we broke it down into 2 parts. Okay. Once you register for the course, and again, go to VectorVest.com/trends. Once you register, you'll get emails with all of these dates in those emails, and these mastery session links are uploaded into the university so you can access the live sessions right there. Live sessions are, of course, recorded, and they'll be uploaded to the university within 24 hours after we deliver them. Oh, wow. Steven says, FYI, I remember when you started 17 years ago. Wow, interesting. That's awesome, man. I was on the phone. So when you first start with VectorVest, you're always in product support, kind of on the phones, and then see how it goes from there. So awesome, man. Yes, okay, I'm going to provide the slides. Give me a second here. I'm just going to go into the handout section. You should see in a moment, it'll say Uncovering Trends, webinar. It should say February, but that's wrong. But you guys should see it in there now. It says Uncovering Trends webinar, February 2023. Don't worry about that. But those are the slides that I used today. Everybody see that? And now, again, it's in the handout section of your GoToMeeting control panel. So if you're joining me via GoToMeeting, look at your little control panel there. If you can't see it, click on the orange arrow. You should have a section there that says handouts, and that are them. That is them. All right. Not that I know of, James. Little VV developing an AI search for AI stocks. We already have one, I think. I know we have a watch list. So we have watch lists in the program called AI hardware providers and AI stocks and ETFs. You can create scans around those 2 watch lists. If you need help doing that, just give our support department a call. So we have 2 watch lists in there that find AI stocks. You can, again, build searches if you wanted to. All right. All right, let's see. Any other questions, guys, before I wrap up? You will, again, have I can tell you who the instructors are. Myself, Ron Wheeler, Stan Heller, and Dr. David Paul. You got an all-star cast, so you're in good hands. So many different lessons. We needed 4 instructors for this one. So this is a fantastic course. Great feedback from the last class. And that $895 price is only available for the next couple of days. It will go all the way up to $1495. Okay? And all of our email addresses, all the instructors' email addresses are in the slides that are already in the university. Again, you will see a lot of content there. You will also see the mastery sessions that we did 3-4 months ago. They will be replaced by the ones that we do for our class. 4 months from now, when we hold another class, our sessions that we do will be replaced with that class's live mastery sessions. Location of the live sessions is GoToMeeting, just like you're in now. GoToMeeting, and all the instructions on how to access the live sessions will be in an email, and the links to join the live sessions are in the university course outline. Neil says, how many hours do the modules take to watch? Let's see, 6 modules. I would say no more, about 10 hours maybe. About 10 hours. Some modules, an hour and a half, hour and 45 minutes, but it's not just all one recording. It's broken down into many lessons, so it's a lot easier to accessible, faster way to access those recordings. Okay, there are no AI searches. Okay, no AI searches. There are AI watch lists, so you got to go into the watch list section to see those AI searches that I just showed. Ben says, will you show how to find stocks under $10 that are trending in the course? Not especially, no, for that. So each live session, anywhere between an hour and 2 hours. Okay. Do you ever run an evening course? No, we never have our live mastery sessions in the evening. No, we do record them so you can watch them that evening because they're uploaded within 24 hours or sometimes less. But we do not have mastery sessions at night. Okay. You're welcome. Okay, if we are signed up in the new coaching program, do we get the program as part of the coaching? No. Okay. All right, guys. Well, I appreciate all those comments. Look forward to working with you. We start in a couple of weeks. Remember, June 28th. 2 weeks from today is when our first mastery session will be delivered. Plenty of time to watch the contents of Module 1. We're not going to jump ahead. We're not going to cover anything else but the contents of Module 1 on June 28th, and then so on and so forth. Okay, so you can watch ahead, but we're going to take baby steps for the next 6-7 weeks. All right. Well, all right, folks. Take care, everybody. See everybody very soon. Remember, $8.95 rate only available for the next couple of days. So go to VectorVest.com/trends. Take care, everybody.